Good evening, everyone. Welcome to the channel. Today I am going to talk about RH quarterly report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. RH offers a wide range of products and services through various channels, including furniture, lighting, textiles, bathware, decor, outdoor and garden furnishings, baby, child, and teen furnishings. The company operates multiple types of stores, such as RH Galleries, RH Outlet Stores, Waterworks Showrooms, RH Guesthouses, RH Interior Design Office. Additionally, the company sells its products through websites, sourcebooks, trade and contract channels, hospitality channels. The significant drop in RH stock price over the past year can be attributed to several key factors. Disappointing earnings results, concerns over new tariffs imposed by the Trump administration on Asian countries from which RH sources its products, and a weakened housing market have all contributed to this decline. In April 2025, RH's stock plummeted 40% following disappointing earnings and the announcement of steep tariffs. The company's weak guidance and tariff impacts further weighed on investor sentiment in September 2025, with an 8.1% drop in stock price after releasing its earnings report. Additionally, concerns about significant inflation emerging and a worst housing market in 50 years have also contributed to the decline. RH's financial health has been questioned, with a low Altman Z-score and ongoing debt issuance noted by analysts. The company's net debt of $2.5 billion and net debt-to-adjusted EBITDA ratio of 4.2x have raised concerns about its ability to manage its finances effectively. Overall, the combination of disappointing earnings, tariff impacts, and a weakened housing market has led to RH's significant stock price drop over the past year. Net income and profit margins. A decline in performance. The financial performance of the company has experienced a decline in recent times. Net sales have decreased by 3% to $1.43 billion, indicating a drop in revenue generation. Furthermore, gross margin has also declined from 36.2% to 34.6%, resulting in a loss of profitability. This decrease in profit margins is a cause for concern and warrants further investigation into the underlying factors contributing to this decline. Determining whether Restoration Hardware Holdings, Inc. generates positive operating cash flow requires additional financial data. The company's net income decreased to $23.4 million in the second quarter of 2025, compared to $34.6 million in the prior year period. However, without access to the statement of cash flows or other relevant metrics, it is impossible to conclude whether the company generates positive operating cash flow. There is insufficient information available to determine if the company's debt level or interest expenses have changed significantly. The company experienced a decline in performance during the second quarter of 2025. Specifically, net sales decreased by 3% year-over-year, while gross margin dropped from 36.2% to 34.6%. These results indicate that both revenue and profitability suffered compared to the same period in 2024. Management is projecting strong financial performance for the company, with expected net sales ranging from $1.42 billion to $1.45 billion in the third quarter, and between $6.15 billion and $6.25 billion for the full year. However, a closer look at segment performance reveals some variability, with RH Modern experiencing a 2% increase in sales, while RH Segment saw a 4% decrease compared to the prior year. There are no notable acquisitions or divestitures reported in the financial summary. The company's financial activities appear to be focused on internal operations rather than external transactions. Based on the financial summary, it appears that the company has not engaged in any share buybacks or paid dividends during the specified period. This suggests a conservative approach to capital allocation, prioritizing other uses of funds over returning value to shareholders through repurchases or dividend payments. There are currently no concerns regarding inventory buildup or supply chain disruptions as per the latest financial report. This suggests a stable and efficient management of stock levels and logistics, minimizing potential risks to business operations. That concludes the financial summary for RH. Feel free to comment below, and I will be happy to answer them when possible.